So I just want to discuss with you a specific trade I took, and it's a strategy called a significant point trade. A significant point trade. What I mean by that is a specific price point that has some historical value that traders react from based on what it did previously. So I shorted this trade initially yesterday during the daytime. As the prices were coming below this point, I took a sell and I placed my stop the other side over here. So here was my entry and my stop was over at this high point here. I was risking 8 pips. My stop was 8 pips. And this was my point of entry. Now, the price came down quite nicely, and then there was a sharp reversal. Came back above my entry at the significant price point, back above my stop, closed the trade, and I was stopped out for 8 pips, which is a fairly decent stop, decent risk to take on any trade. Then the prices failed to continue higher and it came back down again, and it came back below the significant price point, which was the same point of my entry previously. The trade was good to take then. It's also good to take here again. So I just gave it a bit of time and it consolidated below this level, turning this price point essentially into a resistance, which worked quite nicely. And then so I then shorted the pound Swiss again at this just below the significant price point. It consolidated again, as you can see, before making this move down, and then the prices retraced and continued. Now it's beginning to trend, and that was quite nice. My initial profit target was the 152.14, the next significant level, or the next level where traders will make some kind of trading decision. So I wanted to be out by this level, or at least be taking some profit. Now I also implemented the scaling out process of trading. So, and what I mean by that is I had 3 positions on this trade. So as we went down and I got to a point where I was around about 50 pips in profit, I took 2 of the positions off. Okay, so I got out for 52 pips, taking out those 2 positions. Now the price then continued down just a fraction of my my target, the next significant level, before some buy-in had come in. You can see that evident by this bar, that traders thinking the same as I did, taking profits at this level, and also traders who believe that this is also a very low risk buying opportunity, because if you bought it at this point, you would simply have a very low risk stop below the 152.14 significant level, and you know that would be quite a nice buy as we stand right now. So that profit target was significant for 2 reasons. One, taking profit from selling it at the previous level. 2, buying it from this level with a very tight stop, a very low risk entry, and this is what we're seeing happening now. So I took some initial profit here at 52 pips, and then as it came down I closed the other for 69 pips of profit just above the 152.14 level. So all in all, very good trade, profitable on both positions, making back my initial loss, and that is what we call the significant price point trade.